Welcome to Proven and Probable. I'm Maurice Jackson, and I'm delighted to have you here today. Before we begin today's video, make sure you give us a thumbs up and leave a comment in the comment section below. And as always, we thank you for your continued support.
Joining us for a conversation is your favorite and my favorite, David Cole of EMX Royalty, the royalty generator. Mr. Cole, welcome to the show.
Maurice, thank you. Always a pleasure to be here.
Sir, it's great to have you back on the... Well, thank you, sir. It's great to have you back on the program. EMX Royalty is off to a strong start in 2025, and we have much to discuss. For new listeners, could you briefly introduce EMX Royalty and its unique investment proposition?
Well, I'll start off by saying royalties are phenomenal financial instruments embedded with huge optionality, and you want to be exposed to a lot of royalties. My fundamental thesis is that the value of mineral rights is only going to go up over time, as it has throughout our lifetimes. And the best way to be exposed to mineral rights is through royalty ownership. And we accumulate royalties around the world. And in 14 different countries, over 150 royalties. And we do that dominantly through two mechanisms. We accumulate royalties from folks that have already generated them, buying royalties in the secondhand market, and also our bread and butter, which is generating royalties by acquiring actual mineral rights, adding value by coalescing geological data, illustrating prospectiveness, selling those assets on, and retaining royalties as we do that. We also make strategic investments along the way that have been quite profitable to us. And by integrating those three aspects in a very synergistic business model, we've been able to build a significant portfolio over the last 2 decades.
Oh, you certainly have. And with full disclosure, EMX Royalty is a sponsor of Proven and Probable, but I've been on record for a number of years here, I think 9 years and counting. If there was only one company that I could own, it would be EMX Royalty for the virtues we're going to cover here today, Mr. Cole. Now, you just referenced optionality. Can you expand on that narrative just a little bit further for someone who's new to the term?
Yeah, that's a fair question. And I get asked that question every so often. It's a common term within the industry. But what we're really talking about here is we're talking about the possibility of things, good or bad, that can happen to an asset and our exposure to that over time. And there's a value that you can put on that, right? And so the most important aspect of optionality, although there's multiple aspects of optionality, but the most important one from our viewpoint is the potential for new discoveries to be made. So if we generate organically or buy a royalty on a project, and let's say there's 1 million ounces there and we have a 1% royalty, 1 million ounces of gold in reserve and we have a 1% royalty. After they get about halfway through that in their mine production, the geologist has a good idea and finds another 500,000 ounces or another 1 million ounces that we did not pay for did not anticipate when we first generated that royalty or bought that royalty. That's discovery optionality, what Pierre Lassonde calls land optionality. And these are very important because that's where the huge wins can come from. But other aspects of optionality would include commodity price, which can go in either direction, but over the course of my lifetime has gone up. And so these mine properties over time, they don't always find more, but occasionally and statistically, they find more over time as the geology is better understood, as infrastructure is established, as mine engineering techniques advance, as metallurgical technology advances. And these aspects of optionality are multiplicative. And one of the examples I like to point to, going back to Pierre Lassonde and Franco-Nevada, who are shareholders in EMX, is the Gold Strike royalty, which was the first significant royalty that Pierre bought for $2 million Canadian, to really kickstart and get Franco-Nevada started in the early days as a royalty company. And that royalty, thanks to these aspects of optionality, has now cash flowed over $1 billion and is still paying. So that's a very high internal rate of return for a very long time. So it can be phenomenal. Of course, they all don't turn out that well. But the point being is that these can be company making assets.
Well, within your portfolio, respectively, you have the Timok $200,000 investment and over what? Share the numbers with us. I don't want to steal your thunder.
I believe right now it's paid about $7 million, but there's $500 million and counting more to come to us over time from the existing, as we know, resource. That is before the new MG discovery is fully disclosed, and so we can digest and understand that. Zijin has announced in their last quarterly report that they're making a large and high-grade new copper-gold discovery within our footprint. And we can see where that is on the satellite imagery, and it's called the MG zone. But Zijin has not said tonnage and grade yet. They said that they would in the next reporting period. We expect their annual report to be out sometimes towards the end of the first quarter or early second quarter.
Now, for someone who may have missed this, you referenced all the merits of optionality. Should a mine find an additional 1,000,000 ounces, or the commodity price increases for a said product that you're looking to, that they're mining, what is that cost to shareholders?
So that's the beauty of the royalty, right? So we get paid on the top line revenue to the mine in most cases. We have a net smelter return royalty, which net smelter return is what the smelter pays to the mining company. So it's gross revenue to the mining company. And we get a cut 1, 2, 3, 4% right off the top. We pay no money to build the mine, no capital expenditures. We pay no money to exploratory work. We pay no money to clean up the mine afterwards. That's very important. And all the other aspects, right? So that's why we just love this embedded optionality. We're exposed to the upsides. We're exposed to all that potential in that property at no cost to us as a gross royalty holder.
Oh, you got to love
royalty holder, yes.
And that's exactly why I'm so thrilled with this value proposition. Now, let's review some of EMX recent developments, starting with the company's financial position and strategy, where EMX recently reported approximately $27 million in cash and cash equivalents and $35 million in long-term debt maturing in July 2029. How does this financial standing shape your strategic decisions for 2025 and beyond?
So allocation of capital is one of the most important things that we can do to better our shareholders over time. And we're always digesting this, analyzing it, thinking it over. In the recent past, given the fact that our shares are trading at a low price to net asset value, what we call PNAV, we are buying back stock. We believe that's an excellent thing to do with our cash at this time. And we have, over the last year, purchased 5 million shares, fully fulfilling the allotment that the TSX exchange allowed us to buy back. We will, in all likelihood, apply for another block to be able to buy back more in the forthcoming year as well, as we believe that buying back shares of the company is one of the most astute things that we can do. In addition to that, we're likely to pay down incrementally that debt. And I'll point out, we talked about Franco-Nevada. Franco-Nevada is our lender and has been a good capital partner of the EMX over the years. And we're delighted to have them as a shareholder, as our lender, and a syndicate partner in a couple of different royalty purchases that we have done.
Now, for a shareholder that may not be aware of the strategic moves that you're making in terms of that share buyback program, how does that impact the financial health of EMX?
Well, as we decrease the number of shares that are outstanding, then you're incrementally increasing the percent ownership that every shareholder has, right? And we're doing that. Let's say, hypothetically, we're buying it at half of our net asset value, our PNAV. That means that we're essentially doubling our money in terms of value proposition. And that's vastly better and more tax efficient than paying dividends. But we will also buy incremental royalties and continue to grow royalties organically through the other aspects of our business model, importantly. And you've seen a couple of those deals recently.
Yes, and we'll get into them right now. Well, let's begin in Armenia, where EMX...
That was a slow pitch for you.
Here was it. Super Dave at his best there. All right, sir. Let's begin in Armenia, where EMX purchased a royalty interest in the Urusar gold copper project. What motivated the acquisition, and what potential do you see in the project?
Probably the most important thing that motivated me personally is my relationship with Dennis Moore. I believe he's an excellent explorer. He's an ore finder, and he's found some world-class gold deposits in his history. And this is a recent new venture for him to get into Armenia. We believe the geology in Armenia is excellent. We've looked at the geology there multiple times. And so a combination of great geology, so it's ticking the boxes technically, and a steward of that project that we believe in and has a track record of discovery, Dennis Moore.
Now, how does this transaction fit into EMX's broader strategy and portfolio?
This is part of our early stage royalty funding or royalty acquisition plans to help augment the base of our pyramid with great long-term assets that it exposes to that discovery optionality. And I'll point out, this is another aspect of our relationship with Franco-Nevada, and that royalty was purchased as part of a joint venture with Franco-Nevada, where we source and find the royalty acquisition, and they give us a nice little step up for having done that groundwork So they buy 50% of the royalty for 55%, and we buy 50% for 45% of the cost. So we get a bit of a lift there, and it's nice to do another deal with Franco-Nevada. So that was done in the context of the joint venture that we announced several months ago, maybe almost a year ago. And I'll tell you that we failed something like 60 different opportunities before we found one to execute on, just to give you an idea of how picky we are.
That certainly is. Now let's leave Armenia and visit South America, where EMX strengthened its position in the Choppy copper mine royalty acquisition in Peru. Could you elaborate on the significance of acquiring up to 2% NSR royalty on this mine?
Yeah, I'd happy to. First of all, I'll point out that this is within a region of excellent copper and gold endowment, particularly copper. And we love to be exposed to regions with phenomenal endowment. And we believe that the geology and the footprint of this royalty and property position are substantial with excellent long-term discovery potential. So that's a theme that you hear me repeating, right? That's why we're in this business. We want that long-term discovery potential. But we're buying the royalty based mostly on the existing resource, which is a past producing mine and is being brought back into production by astute people with strong history of producing copper in that part of the world. So it's a mine restart. We believe that we will see cash flow fairly quickly from this royalty acquisition within a couple of years. And then most importantly, that the potential for there to be a monster on the property position where we come out a huge winner as opposed to just a nice incrementally good investment.
Leaving Chile, let's visit Peru, where EMX received an early property payment from Aftermath Silver. Aftermath Silver made an early $2.9 million property payment for the Berenguela project in Peru. How does this early payment impact EMX cash flow and plans for similar agreements?
We're fully supportive of what they're doing on the ground there. They're advancing a very interesting manganese and silver deposit with some copper exploration on the property as well. We're quite interested in that long-term copper optionality, the potential for discovery of new copper deposits, but the manganese and silver deposit look quite interesting. The manganese, of course, is an important metal in the battery business, and this deposit has the potential to be a key source of manganese for batteries, but we'll let them work on that. This is a nice aspect is we're just sitting back here as a royalty holder, and then there are specific payments that have to be made to us over time. And we've allowed them some flexibility. They paid one payment a little bit late in exchange for an interest fee. We let them pay another one a little bit early for a small reduction. And we're supportive of them advancing this asset. I believe it's being advanced by smart gentlemen.
Well, good symbiotic relationship there. Now let's visit the U.S., where EMX announced the sale of 4 projects to Pacific Ridge Exploration. What are the benefits of the transaction going to bring to EMX, and how does it align with your growth strategy?
So this is right down the alleyway of EMX's bread and butter royalty generation business. So we go out, we acquire prospective mineral rights, commonly very inexpensively. We coalesce existing data. We collect additional data in the field. We illustrate prospectiveness by building geological models that say, hey, there could be a large gold deposit or copper deposit found on this property. And we sell that on for a combination of commercial terms. With junior companies, commonly includes share payments and incremental payments over time, and always a royalty at the end of the day. And this is just another example of what we do repeatedly on the order of roughly 20 projects a year, typically. I believe we'll do even more than 20 this year, where we sell these assets on for various commercial terms, retain royalties. And this is building long-term discovery optionality at the base of the pyramid. What I mean, the base of the pyramid with the producing royalties at the top, and then the longer-term exploration assets at the base, all being advanced with other people's expertise and other people's money, where we're the long-term beneficiaries.
Speaking of this year, let's discuss the goals and outlook for 2025. With these developments, what are EMX's primary goals and areas of focus for the remainder of 2025?
So we're very fortunate to be in a situation where we have strong positive cash flow. We've had positive cash flow the last 7 quarters consecutively. I anticipate that to continue into the future for some time. And this is coming from a couple of key assets that would include our Caserones royalty in Chile, operated by Lundin Mining Corporation, that's performing nicely as planned, with a lot of exploration work going into that large footprint as well. And then Zijin is getting metal out of the ground at Timok in Serbia, and that's paying also handsomely, in addition to our nice royalty on the Carlin Trend advanced by are being produced by Barrick as part of their joint venture with Newmont called Nevada Gold Mines. And that royalty is paying us nice, over $4 million a year at this point in time. So we're delighted to have these assets. I just named the top three there that are paying us handsomely. And then our job is to allocate that capital that's coming in the front door astutely. And that would include paying down some debt, buying back shares whilst we're undervalued, and do incremental acquisitions such as the one you just saw in Peru at the Choppy Mine.
Has EMX Royalty considered changing its logo to a cow surrounded by cash? I mean, this is a cash cow. I mean,
yeah,
literally.
And I've said for years that we would become one, and we did.
You haven't disappointed, sir.
and we're just delighted to be in that situation where we have this cash to allocate astutely across the portfolio, continuing to grow it organically, continuing to buy more royalties to augment it. And whilst our share price is low, we will buy back stock. I believe that's one of the better things that we can do. Always keeping an eye on our long-term debt and managing the company correctly moving forward.
Yeah, you kind of answered my next question, but I'll ask it anyway. How do you plan to navigate potential challenges in the current market environment?
Well, the money's coming in the door. I don't see any issues with our royalties. Our royalties are performing very nicely. The fact that and the irony that we have very strong metal prices, yet the capital markets within the natural resource space have seen some rough times. It's rather interesting. There's been a significant bifurcation there. I'm not sure how that ultimately plays out, but in the meantime, we're making money. And we can take advantage of the fact that EMX is trading at a discount to our net asset value by buying back stock, as I've already mentioned. When that has been rectified, then we can use more capital to go out and buy additional royalties to continue to grow our royalty portfolio. So it's a game where we understand our cost of capital and we understand how to allocate capital in whatever environment the markets throw at us.
Speaking of share buyback, I know that you're always purchasing shares. Just for the record, have you been buying shares recently?
So EMX just completed the full 5 million allotment that we were allowed to buy back as per a recent press release. I do believe that we'll request from the exchange the right to be able to buy back more shares in the future. That will be forthcoming. And then in addition to that, there has been a solid amount of insider buying as well. That tells you exactly what we think of the company. And very importantly, we own this stock and we build royalty portfolios because we want to be exposed to long-term upside, discovery optionality. And there are discoveries being made throughout the portfolio. The MG zone by Zijin in Serbia is a noteworthy development. From our review of satellite imagery, we can see 12 drill rigs turning within our royalty footprint simultaneously. It's only a couple of times in my life I've seen 12 drill rigs on one project. So that's very interesting to us. The Peak discovery being advanced by South 32 in southern Arizona also looks like it could become a monster. Some beautiful copper, zinc, silver drill holes that have been emanating from that project. And I believe that's a bit of a sleeper in our portfolio that people are not paying attention to. South 32 has said that they are rejigging their mine plan at the Taylor deposit to get into the Peak zone to produce the copper early in the mine life there. That's very good news to us. And then there's other discoveries being made throughout the portfolio. I could go on, but this is why you want to own royalties.
Absolutely. Now, sir, in closing, what did I forget to ask?
I can't think of anything right off the top of my head, Maurice, but, insider buying, share buybacks, discoveries being made throughout the world, and strong cash flow puts us in a very good position, and it's a company that deserves people's attention.
Mr. Cole, if somebody wants to learn more about EMX Royalty, please share the website address.
EMXroyalty.com.
Mr. Cole, it's been a pleasure speaking with you. Wishing you and EMX Royalty the absolute best, sir.
Maurice, thank you so much.
The information presented on Proven and Probable is provided for educational and informational purposes only, without any express or implied warranty of any kind, including warranties of accuracy, completeness, or fitness for any particular purpose. The information is not intended to be and does not constitute financial, investment, or trading advice, or any other advice. You should not make any financial, investment, or trading decision based on any of the information presented without first undertaking independent due diligence and consultation with a professional broker or competent financial advisor.